Okay, so for this video, I wanted to cover the question about whether you as an individual taxpayer can deduct your medical expenses on your tax return. So the short answer is yes, medical expenses paid out of pocket are deductible on your tax return as an itemized deduction. Now the problem most taxpayers are presented with is even though they have medical expenses, they just generally don't have enough, or they don't itemize their deduction, so they really get no benefit from it. So if you're a taxpayer and you have medical expenses paid for out of pocket, you have to consider two factors. So the first one is, did you incur enough expenses to exceed 7.5% of your adjusted gross income, or AGI, for the year? Right? And the reason for this is there is a floor set which basically says your medical expenses have to exceed 7.5% of your AGI, and the excess is what's deductible. So if you don't exceed that 7.5% threshold, there's no tax benefit whatsoever. The second issue is, even if you meet this threshold, do you have enough itemized deductions overall to itemize your deductions for the year rather than use the standard deduction? Okay, so I think the best way to illustrate this is look at an example. So if we have John here, he's an individual taxpayer, and he has total income of $79,125. So that's his AGI. Now John, during the tax year, had out-of-pocket medical expenses related to his surgery for $8,000. So $8,000 is the portion that was not covered by health insurance. John reports the $8,000 on his Schedule A, of which only $2,066 is going to be reported as the medical expense deduction, because that's the piece that exceeds $5,934. Well, how do we get that number? We took 7.5% times his AGI of $79,125, and we arrived at $5,934. So this number is the floor for the year. So John needed expenses in excess of that in order to be able to leverage any kind of tax deduction whatsoever. So if we look at the Schedule A here, so this is John's Schedule A, we can see the values up here, right? So the $79,125 is his AGI, and then we multiply line 2 by 7.5%, that's the floor, $5,934. There is his total expenses of $8,000, and here we can see on line 4 is the amount that is deductible as an itemized tax deduction, okay? So that's the starting point. The second issue, though, is even though, in this case, John has $2,066 of itemized medical expenses, he doesn't have enough other itemized deductions to get over that standard of $12,550, right? So if we look at his Schedule A, he's got the medical expenses here, he's got some taxes paid, but let's say he rents a house, so he doesn't have mortgage interest, he didn't make any charitable contributions during the year, and then none of these other items apply, right? No casualty and theft losses, no other itemized deductions. So John's total itemized deductions here, $2,934, is his total itemized deduction. So the question you were asking yourself is, well, if this number isn't as big as the standard deduction, then I don't use this, right? So on John's 1040 here, if we look at page 1, right, 12A, he's going to be using the standard deduction because it gives him the overall greatest deduction on his tax return. He isn't going to be itemizing. So this is the issue that a lot of taxpayers are presented with, is they find that, okay, we have the medical expenses, but it's really a moot point. Like we just don't have enough to be able to deduct it at all. So what are some options to try to help in this space? Well, the best one is to certainly use a health savings account. So HSAs are kind of similar to a traditional IRA in that when you have an account set up, the money that you put in, so the cash contribution, is a deduction for your taxes, and it's above the line deduction. So what that means is you can deduct the contributions before calculating your AGI. Now when the cash is contributed to the HSA, it sits in that account until it's later used to pay for medical expenses. So if you have an HSA, the custodian will give you a debit card for that account, and you could swipe that debit card and use the funds to pay for medical expenses. Now what's important is when you have these HSAs, well, there's two big important elements here. One, you have to use the money for medical expenses. If you take it out and use it for something else that's non-medical related, there's a penalty on it, and you have to include it in taxable income, so not great. The other element is who qualifies for HSAs. So HSAs are generally only eligible for taxpayers that have health insurance plans with a high deductible, right? So if you have one of these low premium, high deductible plans, you can get an HSA. If you have the reverse, then you likely can't qualify for one. But the HSA is a fantastic way to try to get some tax deduction for your medical expenses, because what you're doing is you're taking the deduction by putting the cash into the account first. And so that is a very helpful tool to help indirectly get you some tax benefit for out-of-pocket medical costs. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.